Hi and welcome to the Market Alert for Monday the 17th of May 2021. So commodities, cryptos and crappy stocks crumble as stagflation signals soar this week. This week flashed red flags that stagflation is upon us, sending bond stock correlation to its highest since 1999. So we're moving from inflation now to headlines of stagflation. US consumer confidence plunges as inflation fears soar. Don't they know it's transitory, i.e. with spike in inflation and then it returns to where it was before? I don't think so. Certainly not with the prices that have increased, because they can take advantage of it. US industrial production disappoints in April as car makers crumbled. Thanks to the collapse comps, industrial production surged over 16% year on year. Again, more inflation. US retail sales disappoint in April as stimmy surge stalls. We're going to need more stimmies. Yep, absolutely. Because as the prices increase, you haven't got the money to buy the goods you want. So, of course, it's going to see a drop-off in consumer spending. Implied volatility for Friday is down to 1451. We had this high of 1911 last week, but down to 1451 during Friday's session, and that's because we saw prices moving higher in the Dow, which you can see here. We had this drive back of 600 points on Thursday. Friday, we then saw prices trading back above the 62% retracement from the high to this low, where at the moment the market's stalling at this level, but we're back above the 20 bar moving average. So sort of typical corrective move for this market. Prices mark down and then start resuming the upside, down, start resuming the upside, down, or as it's known in the trade, buying the dip. But again, keep an eye on these levels here, which we'll talk about more in a moment in the German DAX. But Friday, you can see there that we had a bit of a shakeout at the 1:30 news, which I think was the consumer news, and then prices up, and then just the normal corrective waves as the market continued higher, bouncing off the 20 bar moving average there. In the German DAX is, I can find it, this was Friday's 2-minute chart, the internals of what was going on. When we look at the daily chart, we had a bit of a pullback to the 200 MA, an 89% pullback as well to the high, which then gave the market the impetus to move to the upside. We then had a pullback to the 20 bar moving average, and then we start to see we have a pullback to the 20 bar, then a retracement of around 62%, I think that is there. Let's just have a quick look from this high to this low. Yeah, 62% retracement there, and then close back below the averages, MDI turning red, prices moving lower. Then we get the pullback here where we've gone to green. This is about a 50% retracement. Yeah, 50% bang on. Well, 62 actually is the support on this one, and then prices moving to the upside there for the morning session. Let me just delete these and let's roll forward to the afternoon just to have a quick look. Mid-morning prices continuing to move higher, and then also the news at 1:30 there, shakeout. You can see them buying back in. And then we turn back to green there in the MDI, back above the 5 bar moving average. Prices hold, just the odd pullback there, and the same into the afternoon session. Prices pulling back to the 20 bar, then returning back to green, and then making their way up before prices pull back. We had another buy signal here, but the market taking out the stop initially, but then a second one where we see prices again holding above that 20 bar moving average with the odd close below the 5 bar, then reversing back to make up the loss of the losing trade there. Overnight prices, let's have a look, are higher. As we can see here, above the high initially, but then you can see them selling through this and then starting to drive lower, following the Dow futures lower. finding support at the 15,400 level there, the red line, where we're seeing a bit of a bounce at the moment. So let's just compress everything down and have a look, see where we are. We're just above the DP and above the 200 MA at the moment. So Friday's high and close needs to be taken out in order to move higher. Close below the DP will more than likely have a look at the S1. The low is a long way, which you'll see why now as we look at the daily chart. You can see there that the market just moved from the low all the way up during Friday's session. From this high to Thursday's low, the market managed to get through the 89% retracement and ran into trouble at the high of the 10th of May there. So through the 89, but resistance at the 10th of May, because that's when we had the other correction down to 89 and then down to the 828 level. So let's just draw in a couple of markers here. Let's start off with, get the right tool. So from this low to this high, let's just have a quick look. It's going to be quite a distance away for the 38. Takes you down to the 20 bar moving average, but that's not too great a distance. That would take you down to the low as well, as we can see there. So that would be currently a drop of 150 points, nearly 200 points down to Friday's low, which is not inconceivable given the volatility that we've seen. You have to look at how volatile it's been once the market broke down and how they've managed to bring it back and how much larger the range of the bars have been, in particular Thursday and Friday of last week, and also I think that's Thursday, Wednesday, Tuesday of last week as well. So the 38 isn't out of the question if there is a move to the downside, but this will be a major support area because it does cover the low of Friday and the 20 bar moving average as well there. On the upside, of course, there's not a lot to debate if the market holds at the 89% drawn in here from this high to this low. And in fact, I could redraw this one because we can go from this high to Thursday's low. So let's just draw this in and see where the 89. The market's currently trading at this. So no surprise that prices are just holding there at the moment. So yeah, very important that we stay above this fib here at 15,435. You know, just holding above there at the moment. And like I say, to take out the high of the overnight as well would be very important as well for the German DAX. A quick look at the metals and the dollar before concluding. Let's see if I can find it. So starting off with silver, and again I am surprised and now starting to be reassured by what we're seeing here. A close above this area of resistance, a lot of resistance in this area. We need to close above this red line, which is the $28 per ounce level. We need to get through this and have another look at the 28.32, and then of course we've got the $30 per ounce level that we saw on the 2nd of February. But at the moment we've got this resistance to take out. We're back at 89% now at 27.73, and then we've got this other area here. We've got the extension, which is taking the recent high, and then the 89%, which we drew in from this high to this low, which is that we got that one at 27.734, and then the 81.6 level as well. And then just to add a bit more resistance, we've got 86. So really we need to get through 28 is what I'm saying here. We need to drive through and we need to hold. You can see them buying overnight, which is a strange sight. Normally it's a shakeout, as you'll know from previous market alerts. Again, you can see this spiking prices to the upside and still moving as I'm actually recording. The dollar also actually on the upside, which is strange, and the sooner these decouple, the better. then we'll see the silver price moving higher along with the US dollar as well, which will be great. It won't do that for long, of course, because that's not normal, but to see that decouple would be great for the precious metals if they can continue to move higher while the US dollar also attempts to move higher. Like I say, it'll be temporary, but it's encouraging to see, to say the least. Gold also just trading through the 89% retracement there that we've had drawn in for some time from this high to this low and projected back. So just stopping there at the moment through the 200 MA. The next upside target is going to be the 1875 level there as well. So heading back quite comfortably from the lows down here of 1676, nearly $400, over $400 actually off the all-time high in this market. That's some pullback. They didn't like that, did they? So yeah, that needs to. There you go. There's the all-time high, $2,076. And there you can see the upside targets in the monthly chart. So one hell of a pullback in the price of gold there, down to the 20-bar moving average, 62% retracement from this low to this high. And like I say, we need to take out all of these fibs to move back to the $2,000 level. If we get through it this time, we stay above it. It's as simple as that. Okay, I think that will do it for this one. If there is anything else to report, no, I haven't finished yet. Hold your horses, Keith. News. What news have we got this week? Well, we haven't got anything for today. We haven't got anything for tomorrow, so the market's going to have to make its own direction for the next 2 days. There's no economic news to actually move prices. Wednesday, it really starts to pick up. FOMC meeting minutes at 7 p.m. This has been downgraded to a medium impact news item, which is bizarre. Thursday, the criminal's out. She's speaking at 1 p.m. And then we've got some more US news. But Friday, wow, we have an abundance of news on Friday. So it'll be interesting to see how the market plays out on Friday, starting with retail sales in the UK. Then, we get all of the flash news. That's why then, yeah, the monthly flash, which is a pain in the rear, as you'll know again from previous market alerts, because you can just get into the trade and then there's another news item released. Then we've got, again, the criminal speaking at midday, and then the US has their flash news at 2:45 p.m. So that's a look at the week ahead as far as news is concerned. But for the next 2 days, there is no economic news. The market determining its own direction. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.